Good afternoon, everyone, and welcome to this webinar on the upcoming Judicial Pension Scheme. I am George O'Shea, and I lead the Judicial Pension Reform Policy Team, who are responsible for delivering the Reformed Judicial Pension Scheme 2022, or JPS 2022, as we call it. The purpose of this webinar is to give you more details about the upcoming scheme. It's worth saying from the beginning that this will be the most generous pension scheme in the public sector when it launches on the 1st of April 2022, subject to the passing of necessary legislation by Parliament. And though it will be different to previous schemes, I hope that by the end of this webinar you will know more about the changes we're bringing in and why. This presentation is specifically targeted at judicial office holders in salary groups 5.1, 5.2 and 6. And wherever possible, we've used worked examples specific to those groups. And in preparing this webinar, we collated and answered frequently asked questions raised about JPS 2022 during the consultations and through communications with judicial associations. In this presentation, I'll go through the features of the scheme, comparing them to previous schemes like the Judicial Pension Scheme 1993, which is also known as JUPRA, the fee-paid Judicial Pension Scheme, and the new Judicial Pension Scheme, or NJPS, also known as JPS 2015. Then I'll go through a few common questions we get asked. There will be a Q&A at the end of the presentation, where I'll answer as many of the questions you posted as I can. But I should say that individual circumstances will vary and we will not be able to address personal queries nor provide financial advice. This session is being recorded and we will make it available to you for your future reference. And this has been accompanied by an information booklet, and we will also share these slides. And this will be very similar to the webinar we gave for these salary groups about a week ago, except for the Q&A, of course. Starting off then with an overview of the scheme. So JPS 2022 will be open to all eligible salaried and fee-paid judicial office holders who are in office when the scheme commences, and those appointed after this date who are eligible for a judicial pension. From the date of its implementation, which is currently planned for the 1st of April 2022, subject to parliamentary timing, JPS 2022 will be the only scheme for future accruals of service in which judges are able to accrue benefits, and all other judicial pension schemes will be frozen to future accruals. Before I get into some of the new scheme features, we often get questions about whether benefits accrued in previous schemes like JUPRA will be preserved. Please be assured that benefits previously accrued in predecessor schemes will be protected. This includes the preservation of the automatic lump sum and final salary link in respect of reckonable service in those schemes which offered those features. Once judges have moved to JPS 2022, all pension accruals in respect of future service, though, will be according to the terms of the new scheme. Again, this does not mean that you lose the benefits already accrued in previous schemes. Whatever pension you have accrued in JUPRA, the fee-paid Judicial Pension Scheme, or NJPS, stays in that old scheme, subject to the MacLeod remedy if you are eligible for that. So when you retire, you may have a combination of judicial pensions from 2, 3 or 4 different schemes. A common but linked question to start with is, what does it mean to preserve the final salary link and the automatic lump sum in respect of previous schemes? Upon transferring to JPS 2022, the final salary link for those judges transferring from final salary schemes like JUPRA and the fee-paid Judicial Pension Scheme will be protected. This also includes those judges who are transferring to JPS 2022 from NJPS, but have previously accrued service in JUPRA and or the fee-paid Judicial Pension Scheme, subject to any relevant gaps in service. This means that all accruals in one of those final salary schemes will be calculated in relation to a member's final salary when they retire or otherwise leave JPS 2022, and not their salary at the point where they left the old scheme. It's worth noting that the preservation of the final salary link is only applicable for those judges who were in a final salary scheme and remain in JPS 2022. In the event a judge opts out of the scheme, they would usually sacrifice this final salary linkage. In this case, the final salary would not be based on the salary at the point in which they opted out of JPS 2022, not their salary when they left the old scheme. I'll talk more about opting out later. Members of final salary schemes who join JPS 2022 and continue in service will still receive their automatic lump sum on retirement from their final salary scheme, which will be protected in the same way as other pension benefits. The automatic lump sum is based on their annual pension from the final salary scheme. In addition, members will also be able to commute a lump sum for the duration of their time in JPS 2022 in a separate pension pot, which I'll come on to later. If, however, a member of a previous scheme joins JPS 2022 and dies in service, all the accrued benefits, including dependent benefits, will be protected, but the death in service lump sum will be paid out of the JPS 2022 scheme and not out of the previous scheme. I'll explain more on that later in the webinar. Here is a table of comparison between the schemes. In this presentation, I'll take you through these 7 features. They are, first and most significantly, the tax status. Second, the member contribution rates. Third, the lump sums and commutation supplement. Fourth, the career average accrual model. Fifth, the accrual rate. Sixth, the service cap. And seventh, the retirement age. I'll take you through each of these in turn, starting with the tax status. JPS 2022 returns judges to a tax unregistered pension scheme, which is the position they were in JUPRA and the fee-paid Judicial Pension Scheme. Tax unregistered means that benefits accrued under the scheme will not count towards either the individual's annual allowance or the lifetime allowance. This particularly benefits judges who may be subject to annual allowance charges, or those who may be near or who have reached their lifetime allowance. The current annual allowance limit is £14,000, or lower for higher earners, and the lifetime allowance limit is £1,073,000. When judges move to JPS 2022, the annual allowance does not apply to the benefits accrued in this scheme, but benefits accrued in NJPS alongside any other tax registered pensions still count towards the individual's lifetime allowance. Other features of JPS 2022 flow from this tax unregistered status, including the member contribution rate and lump sum commutation supplements. So member contributions are compulsory for all members of the scheme and are made by deductions from your earnings. The contribution rate for JPS 2022 is a uniform contribution rate of 4.26%. On those final 2 bullet points, member contributions in a tax unregistered scheme do not receive tax relief. Effectively, because the scheme is tax unregistered, you don't have to pay additional tax if the value of it increases over 40,000 in 1 year, but your contributions will attract less beneficial tax treatment. Therefore, the contribution rate in JPS 2022 has been set at a lower rate compared to NJPS to ensure that generally members will pay roughly the same contribution to the scheme net of tax. We've worked up a few examples to show what that might mean for a member in practice. First off then, here's a comparison table comparing what you might contribute in each year in JUPRA with what you would contribute in JPS 2022. You can see that the figures in bold on the right of the table show that if you are already a member of salary group 5.1, 5.2 or 6, and you're currently only paying member contributions to JUPRA, your monthly contribution to JPS 2022 will be lower. So for salary group 5.1, for example, that's £19 lower a month, which works out as £223 less a year, which means your take-home pay should be a little higher. And to note, we've put a few disclaimers on this slide and some other slides as well, as these are only example figures, and the salary figures are for the year 2021 to 2022. Now, this table compares member contributions between NJPS and the upcoming scheme. As you can see, worked through here by looking at the bold figures on the right of the table, it's a similar reduction when compared to JUPRA on the slide before. As you can see, members in salary groups 5.1, 5.2 and 6 would all contribute less each month, which means all those of you in those salary groups will have an increase in take-home pay. So as you can see, for salary group 5.2, for example, that's £18 lower a month, which works out as £214 less a year. However, some judges in certain salary groups, particularly salary group 7, express concern in our consultation. That's because of the way the uniform rate works out. They will face a reduction in take-home pay if they move from NJPS to JPS 2022. So, in acknowledgement, we're going to provide all judges, including those in higher salary bands, with a time-limited option of mitigating the impact of transitioning to the new scheme by paying a lower contribution rate, with a corresponding lower accrual rate. But before I go into the option to have a lower contribution rate, this slide shows a demonstration of the increased value of the pension in this more generous new scheme when compared specifically to NJPS, and assuming you stay at the standard uniform rate. This table shows the increase between NJPS and JPS 2022 for judges in salary groups 5.1, 5.2 and 6 pensions. For example, a judge in salary group 5.1 would have an estimated combined salary and pension worth just over £194,000 if they were to stay in NJPS for a year. But you can see that by comparison, their estimated salary and pension under JPS 2022 would be over £235,000 if they were to stay in the scheme for a year. That's an increase of 21%. A judge in salary group 5.2 would have an estimated combined salary and pension worth just over £188,000 if they were to stay in NJPS for a year. By comparison, their estimated salary and pension under JPS 2022 will be over £226,000. That's an increase of 20%. And in the bottom row of that table, a judge in salary group 6 would have an estimated salary and pension worth just over £174,000 if they were to stay in NJPS. By comparison, their estimated salary and pension under JPS 2022 will be worth over £213,000 if they were to stay in the scheme for a year. That's an increase of 19%. I'll explain next how the option for a lower contribution rate will work. Judges who are in office on the 31st of March 2022 may opt for a lower contribution rate of 3% for 3 years in exchange for a reduction in their accrual rate from 2.42% from 2.5%. I'll go through some example figures in a moment. We'll be writing out to you in the next couple of weeks. You will have until the end of June this year to respond if you would like to take the lower rate. These rates would apply for the first 3 years after the implementation of JPS 2022. This will be a one-off choice given to all eligible judges when JPS 2022 is implemented, meaning that once you elect for this choice, you cannot then change your mind. It will only be available to those judges who are in service on the 31st of March 2022, and not to judges who take up service once JPS 2022 has been implemented. But assuming that, regardless of whether a judge was an active member of a pre-2022 scheme, a partnership pension account member, or opted out of a pre-2022 scheme, they will be eligible for this option if they are joining JPS 2022 on the 1st of April this year. Of course, you are under no obligation to take up the optional rate. If this is the case, you will not need to respond to the letter you'll be receiving, but if you do want it, we'd recommend responding as early as possible. After the first 3 years of the scheme, all judges will be subject to the same contribution rate, which is 4.26%, and accrual rate, which is 2.5%. The contributions options exercise will allow judges time to adjust to the contribution rate, particularly if they would otherwise face a reduction in their take-home pay when they move to JPS 2022. So what if a member opted for this lower rate? What would that look like? This table applies if you opt for the lower contribution rate during the contribution option and are currently a member of NJPS. So if you look at the final column on this table, you can see that for salary group 5.1 judges, you would see quite a large difference in contribution amount, contributing £175 a month and over £2,000 less a year than you did in NJPS. Similarly, for salary group 5.2 judges, you'd also see quite a large difference in contribution amount, contributing £168 a month and just over £2,000 a year less than you did in NJPS. And for salary group 6, it would mean a decrease in pension contributions compared to NJPS, contributing over £150 less per month and nearly £1,900 less per year. And if you are a member of Jupra, it's a similar picture, where you contribute less per month if you opted for the 3% contribution rate. As the figures in bold on the right of the table show, those judges who are in salary group 5.1 and a member of Jupra will contribute £175 less per month and £2,000 less per year. Judges in salary group 5.2 will contribute £168 and just over £2,000 less per year. And for salary group 6, that would be just over £150 less per month and £1,900 less per year. We will be sharing more information about this lower contribution rate exercise through letters sent out soon before the scheme launches, and you will have ample time to make your decision before the end of June. On to another feature of JPS 2022, which also has implications thanks to its tax and registered status, is the lump sum commutation and the commutation supplement. JPS 2022 won't provide an automatic lump sum as was available in Jupra or the fee-paid Judicial Pension Scheme. However, scheme members will have the option to commute or give up some of their pension in exchange for a lump sum as in NJPS, supplemented with additional funds from us to cover the tax charges. I'll go through an example in a sec, but the contribution rate for JPS 2022 is 12:1. So for every £1 of annual pension given up, the member receives £12 of lump sum on retirement. There will be a maximum proportion of your pension that you can commute as a lump sum, currently planned to be 35.7%, for consistency with the amount to be commuted in a tax registered scheme. Commutation on its own is considerably less attractive in a tax unregistered scheme, where tax will be payable at the top rate of 45% on any commuted lump sum. To mitigate this, members will therefore receive a commutation supplement to compensate for the tax unregistered status of the scheme. This is similar to the Judicial Service Awards that judges received under Jupra and the fee-paid Judicial Pension Scheme. Here we've put an example just to show how the commutation supplement calculations might work. If we have a judge, let's call her Judge A, and Judge A has built up an annual pension in JPS 2022 of £36,000. And after any actuarial reduction or enhancement for early or late retirement has been applied, she would like a lump sum on retirement of £96,000. In the second bullet there, a calculation is done, which is 96,000 divided by 12, which equals 8,000. That's what the 1 to 12 commutation means. So to obtain the commuted lump sum, Judge A must give up the amount of annual pension commuted, in this instance £8,000. The new pension value would be 36,000 minus 8,000, which equals 28,000 pension per year instead. However, the £96,000 lump sum would then be taxed at the top rate of 45%, as it's coming out of a tax unregistered scheme. So in this case, an additional commutation supplement would be paid as well, where Judge A would be paid an additional £78,500 to make sure she ends up with the 96,000 she asked for. Linked to that, note about the Judicial Service Award. The JSA is an award paid by the Ministry of Justice on retirement to cover the income tax deduction applied to the automatic lump sum payments out of the fee-paid Judicial Pension Scheme and Jupra only. We've recently received some inquiries about whether the Judicial Service Award will still be payable after the 1st of April 2022. And the answer to that is yes, the JSA will continue to be paid to those eligible. Unlike the JPS 2022 commutation supplement, which is referred to in the scheme, the JPS 2022 scheme regulations, JSA payments are made through a Lord Chancellor's determination. This slide explains the accrual model in JPS 2022. The way you build up a pension in JPS 2022 will effectively be based on the average of your pensionable earnings throughout your membership of the scheme using an accrual rate. The value of pension earned in each year is calculated using the accrual rate, which for JPS 2022 is 2.5% or 1/40th. This is the same accrual rate as Jupra and the fee-paid Judicial Pension Scheme, and an increase to the accrual rate set for NJPS, which was 2.32%. Every year, a member will bank an amount of pension at the accrual rate of 2.5% of their pensionable earnings in that scheme year. The member's final pension will then be made up of the amounts banked each scheme year. The amounts banked will be index linked annually, and this is currently in line with CPI, or the Consumer Price Index. Next, I will explain more about the accrual rate in the scheme. The value of pension earned in each year is calculated using the accrual rate, which can be expressed as a percentage or a fraction. As I've said, JPS 2022 will also have an accrual rate of 2.5% or 1/40th, which is higher than NJPS and the same as JUPRA and the fee-paid Judicial Pension Scheme. So, to show that, returning to our example judge, Judge A, let's say her pensionable earnings for 1st of April 2022 to the 31st of March 2023 are £134,000. That judge would earn a pension of £3,368 for the scheme year, which is £134,000 times 2.5%, which equals £3,368. Members that opt for the lower temporary contribution rate I described earlier would instead receive a lower accrual rate of 2.42% for that time period of 3 years. Next up is the service cap. There will be no service cap in JPS 2022. The service cap was something we received a lot of feedback on in relation to JUPRA and the fee-paid Judicial Pension Scheme, and we are pleased to be removing it. This means that JPS 2022 will not limit the number of years for which a judge can accrue pensionable service. This is consistent with NJPS and differs from JUPRA and the fee-paid Judicial Pension Scheme, where a judge could only accrue service for 20 years. And under JPS 2022, the fact that a judge is near or has met their maximum service in JUPRA or the fee-paid Judicial Pension Scheme will not have any impact on the amount of pension they can accrue under JPS 2022. Now on to retirement ages. The normal pension age is the age at which you can retire and receive an immediately payable unreduced pension. For JPS 2022, your normal pension age is linked to your state pension age. This feature is retained from NJPS and differs from the retirement age of 65 in JUPRA and the fee-paid Judicial Pension Scheme. Therefore, if your state pension age changes, all benefits accrued under the scheme will be linked to this new age. You can calculate your state pension age by using the calculator available at the gov.uk website shown, or typing into an internet search engine, "What is my state pension age?" For those retiring now, state pension age is currently 66, but there will be a gradual rise to 67 for those born on or after April 1960, and a gradual rise to 68 for those born on or after April 1977. If your state pension age changes, all JPS 2022 benefits will be linked to the new age. This means that any new state pension age will be the age at which the member's entire pension under the scheme, including pensions earned before that change, is available on an unreduced basis. It is possible to take your pension before or after normal pension age. Under JPS 2022, a member can retire from a post at any time after the minimum pension age, currently 55, subject to certain conditions set out in the scheme. This is different to JUPRA, where it's not generally possible for a pension to be drawn before the age of 60. Like in NJPS, under JPS 2022, if a member retires before reaching their state pension age, there will be a reduction in annual pension to reflect that you have been paid earlier and for longer than if you had retired at your normal pension age. The early retirement reduction is determined using factors set by the Lord Chancellor, having taken advice from the scheme actuary. The minimum pension age is expected to be increased to 57 in 2028, subject to legislation. And from then on, the minimum pension age is expected to remain 10 years below the state pension age. Further details on the current state pension age timetable and plans for future review are available online. You may also choose to retire from judicial office after your normal pension age. In this case, a late retirement enhancement will be applied, reflecting the fact that your pension will be in payment for a shorter time than had been the case had you retired at scheme pension age. The enhancement or late retirement addition will be determined again using factors based on advice from the scheme actuary. So unlike in JUPRA, you'll be paid this late retirement addition for retiring after the normal pension age. We've not addressed partial retirement and sitting in retirement in this webinar, as it forms the topic of a full webinar, which will take place on the 22nd of February. So I've gone through some of the scheme features, and before we get into Q&A, I'll address some of the questions we've previously been asked. First off, some questions on the retirement age. Obviously, I can't address all the potential scenarios for retiring, but here are a few. Starting with question A there, will the retirement age be different if you have membership in JUPRA or NJPS and then decide to go into JPS 2022? So the normal age of retirement in JUPRA is 65 years and NJPS may be 67. In JPS 2022, the new scheme, the normal age of retirement is state pension age, maybe 67. So yes, for a member of another scheme, the age of retirement will be different once you're in JPS 2022. But it's important to remember you'll still retain your benefits from JUPRA and NJPS when you do retire. In example B, will I be penalised if I'm a member of JUPRA and retire at 65, not 67? If you retire at 65, you'll be given a pension from JPS 2022, which would be actuarially reduced to reflect that you will be in retirement for a longer period of time than had you retired at state pension age, which is the normal pension age in JPS 2022. And however, as your pension comprises of two elements from JPS 2022 and JUPRA, it's only the pension under JPS 2022 which will be reduced, not the pension in JUPRA, which will remain unaffected. In example C, what about if I retire at 54? If you retire at any point before the normal minimum pension age, which is 55 under JPS 2022, your pension will be deferred until you reach the age of 55. And example D, can I retire at 65, receive the JUPRA pension and defer receipt of the 2022 scheme pension until the age of 67? Yes, you may certainly retire at 65, receive the JUPRA pension and defer receipt of the 2022 scheme pension until the age of 67. As you're drawing the pension at normal pension age, no actuarial reduction would apply. We've been asked a bit about death in service changes too. Death in service benefits are twofold. First, there's the single lump sum, which would be awarded to dependents or nominated beneficiaries, and second, the ongoing survivor pension benefits. If you die whilst serving as a judge or judicial office holder, and you are an active member of JPS 2022, the lump sum payment will be paid out of JPS 2022 and not from a previous scheme. These kinds of payments have and always are paid from the scheme of which you are an active member. In JPS 2022, members will also receive a death in service lump sum supplement to compensate for the tax unregistered status of the scheme. This covers the tax due on the death in service lump sum and the tax that would be liable on the death in service supplement itself. This is one of the ways that the scheme is designed as a consequence of its tax unregistered status, and to ensure that no member is worse off compared with if the scheme was registered. But that does not mean that you lose access to any other benefits you've accrued under the previous scheme in relation to death in service. Your survivor's pension benefits you have accrued in those schemes are preserved, and you will still be paid to your dependents, in addition to any dependents' pension you may build up then in JPS 2022. I'll go into dependent pensions on the next slide. Alongside the death in service lump sum, JPS 2022 will also provide for pensions to surviving adults and eligible children upon a member's death. The scheme will pay a pension to a surviving spouse, civil partner or surviving cohabiting partner. Pension will be equal to 3/8 or 37.5% of the scheme member's pension and will be payable for life. The pension does not stop if the survivor remarries or enters a new relationship. However, where the surviving adult is more than 12 years younger than the member, the pension is to be reduced by 2.5% every year over 12, subject to a maximum reduction of 50%. Surviving children will also be eligible for a pension if they are under 18 or if they are under 23 and in full-time education. The eligibility criteria for partners and children are broader in JPS 2022 than under JUPRA and the fee-paid Judicial Pension Scheme. So there may be some cases where an individual qualifies for a dependents pension under JPS 2022 and NJPS, but not JUPRA or the fee-paid Judicial Pension Scheme. For example, if an individual was a member of pre-2022 scheme and was eligible for a pension under both schemes, but subsequently remarried or entered a civil partnership, the JUPRA or fee-paid Judicial Pension Scheme element of the pension may be stopped, whereas the JPS 2022 and NJPS pension would be payable for life. I'd briefly like to add that should a member die out of service, so if they are a deferred member or a pensioner member in retirement, dependents or nominated beneficiaries may be awarded a lump sum too. To be eligible for this lump sum, the person's death must be less than 5 years after their full retirement pension or ill health pension becomes payable. Members will also receive a death out of service supplement to compensate the tax and registered status of the scheme. This covers the tax due on the death out of service lump sum and the tax that be liable on the death out of service supplement itself. This is in addition to the 3/8 or 37.5% of the member's pension payable for life. I'd now like to explain in greater detail how options to contribute more towards your judicial pension work in JPS 2022. This is through the Judicial Additional Voluntary Contribution Scheme, or JAVCS. The JAVCS is a tax-registered defined contribution scheme. So contributions attract tax relief and pension benefits count towards a member's annual allowance or lifetime allowance, and contributions made to the scheme are invested with an authorised independent pension provider. They invest the member's contributions as requested by the member according to a range of investment options. The fund which is generated can be used to purchase pension benefits for the scheme member or their dependents. It's important to note that the option for a judge to make additional voluntary contributions via the JAVCS will still be available under JPS 2022. Any member of the scheme will be able to take out an additional JAVCS pension account as part of their pension arrangements, and any member who currently holds one of these accounts will be able to continue to invest in this scheme. So for members joining late or looking to retire early, who may lack a facility to contribute more to make up for gaps in their service record, or to make additional financial provision in order to retire before the state pension age, those options remain through JAVCS. But though the JAVCS scheme will be available, JPS 2022 will not give members the option to make additional contributions to purchase added pension, or the option to make periodical payments to attain a lower effective pension age. This is because the ability to purchase added pension or attain a lower effective pension age will be considerably less attractive in a tax unregistered pension scheme, as members would receive no tax relief on their contributions and no employer contributions on payments made into the schemes. In addition, any benefit purchase would be subject to tax. Transitional members, or those members who are moving into JPS 2022 from a pre-2022 scheme, who already have added years, surviving spouses' pensions, or added pension arrangements purchased through that pre-2022 scheme, may be allowed to continue making payments, but only for the duration of those existing arrangements, and noting that those arrangements will remain tax registered. On transferring in and out of the scheme, in JPS 2022, members will be unable to transfer pension rights into the scheme. This is again because of the tax status of the scheme, where any transfer into the scheme would attract charges for both the member and administrator of the pension fund from which the money was being transferred. Also, most scheme rules for private pensions do not allow the transfer of pensions to tax unregistered schemes. Therefore, this feature will be unattractive to the member and the scheme owner. Once members transition to JPS 2022, they will no longer be able to make any further transfers into the pre-2022 schemes. Members of JPS 2022 will still have the right to transfer benefits out of the scheme to a registered pension scheme or qualifying recognised overseas pension scheme. In both cases, the scheme must be a defined benefit scheme, and where a transfer out is paid, all rights to benefits under JPS 2022 will stop. Before transferring out to another pension scheme, you will be strongly advised to seek independent financial advice to understand your options and consider the tax implications for doing so. We would like to clarify that for those members who are already members of pre-2022 schemes, that even though you will join automatically And again, this is a very generous scheme. You're not forced to start or continue in JPS 2022. Should you wish to, you could opt out at any time using an opt-out notice, which will be sent out shortly. You would need to respond to the instructions in that letter by the given deadline. If you opt out of the scheme or initially choose not to join the scheme, you will be able to opt back in again into membership. However, it's worth noting that you won't be able to opt in more than once within a 12-month period. If you opt out within 1 month from first joining the scheme, it will be backdated to day one and all contributions will be returned. Otherwise, it generally takes effect from the beginning of the pay period after the notice of opting out is given. Okay, so we'll now open to Q&A. Thank you for the questions you've posted. I'll pick out some of these in the remaining time. If I don't answer any questions, we'll try to make sure they're covered in the future. And if there are a number of similar ones, I'll try and group them as well. Once again, individual circumstances will vary and I will not be able to address personal queries. So first question, will we get a copy of the slides? Yes, you will get a copy of the slides. There's also, this presentation has been recorded. It has also been sent out with an information booklet, and we'll be sharing a scheme guide as well, closer to the launch date, which should answer questions as well. Where can we find the consultation and regulations? So there we did 2 consultations for the scheme. If you type into Google Judicial Pension Scheme consultation, you'll find those there, as well as a pretty up-to-date version of the regulations. Next on, what does Parliament need to approve? So we're reliant on 2 things. There's the Public Sector Pensions and Judicial Offices Bill and some regulations, both of which are on track to be passed by Parliament before the 1st of April, but the scheme relies on those regulations and that bill. When will I be offered the lower contribution rate? How long will it take to process this? So you'll be given communications, should be very soon. I believe the letters are going out this week or very soon, or at least well before the 1st of April. And you'll then have until the end of June to respond to that. Again, it'll be a one-off decision. And that'll be made. In terms of how long it'll take to process, I believe it's relatively quick, but so long as you reply before the deadline, it will be processed. Can we make transfers from our old pensions into the new scheme? So you won't be able to transfer from the old schemes into the new scheme. Can you explain the difference between registered and unregistered tax status? Why is this important? So the main benefit of being tax unregistered is that you don't come up against annual or lifetime allowance limits, which a number of judges do face, but also means that you don't get tax benefits when contributing towards the scheme. So we've designed the scheme to make sure that nobody is worse off because of the tax unregistered status, but also benefiting from that tax unregistered status as well. How do I opt out of JPS 2022? So you'll be sent an opt-out form soon, and you'll have to reply to that. Worth saying that it would be worth getting independent financial advice before doing that, because if you do opt out of the scheme, you won't be able to accrue benefits, and actually you'll lose access to a lot of the benefits of the scheme. So yeah, do get independent financial advice. If the judge's anniversary for appointment and entry into JUPRA is March, will the April start of JPS preserve the last number of years, e.g. March 2020 onwards will be year 10 in JUPRA and lump sum increased. April 2022 will be year 1 in JPS, no further increase in lump sum. Or would it be year 9 of JUPRA because it would not be a complete year? Good question. Think about that one. So JUPRA will close in March, and then only JPS 2022 will be open for accruals. In terms of how that works for the final salary link, I'm not sure. I don't think it'll be affected by which year you were in terms of the JUPRA scheme. Is the commutation supplement itself taxable? Yes, but the the aim is that members will be compensated for any tax that is incurred from the commutation supplement. How will my JUPRA or PUPJIPS benefit be treated when I move into the new pension scheme? So it'll be preserved, as I've said at the beginning, and if you missed the first bit of the webinar, it is recorded, so I talk a little bit about that then. They will be, and they are preserved with the final salary link, which is your final salary link when you retire. Otherwise, they'll all generally be protected. All the benefits you've built up in their schemes will be protected. If I opted out of JPS 15, will I still be enrolled in JPS 2022? Yes. So if you hold office on 31st of March 2022, all judges are being automatically put into the new scheme. You may check that sort of in case your individual circumstances mean that's different, but that's certainly the intention. Can you send around the links in the presentation, please? Yep, certainly those will be in the slides. You're now saying a judge who has already accrued 20 years service under JUPRA can join the new scheme an additional pension beyond their JUPRA entitlement. So yes, so even if you've met that 20-year cap in JUPRA, as soon as the new scheme opens, you'll be able to begin accruing more pension benefits in this new scheme, which then go on top of your JUPRA pension that you've already accrued. How do I make additional contributions? Can I buy added years? So there will only be the JABCS way to get more pension benefits. There won't be the options for additional contributions or added years. How do I make a nomination? So you do this through XPS. There is a form, or you can email them and say that you want to change your nomination. Really important for beneficiaries to be kept up to date with XPS. So if any of that changes, really important to let them know. What is the minimum period of membership of JPS 2022 before any benefits may be taken after retirement age? So there isn't a kind of minimum pension level. You just have to be over that normal minimum retirement age. You need, I believe, 2 years service, but any service that you've done before JPS 2022 starts would count towards that 2 years. So it wouldn't be 2 years from when JPS 2 starts. You just have to have been in for 2 years. I believe it's 2 years. I think there's also a question or two about the McLeod remedy. We've pretty much run out of time, I'm afraid. We've got some more webinars coming out which are specifically on the McLeod remedy, which I think will answer some of those questions. Those are happening at the beginning of March, so do sign up for them, and they'll go through the McLeod remedy in a bit more detail than I can now. Unfortunately, we've run out of time, and I think that's most of the questions answered. So thank you once more for your attention. Do expect more communications about the scheme, and if I haven't answered any questions there and you'd really like a personal response, please do email us. And as I said, there'll be more webinars on the McLeod remedy and partial retirement and sitting in retirement. So do sign up for those as well. Hope answers to the questions have been useful. I'd like to remind you that there's also an information booklet which contains further details about where to direct any queries, and the session's been recorded and we will make it available along with the slides for your future reference. Thank you very much for listening, and I hope you have a good evening. Thank you.